Good afternoon and welcome to another VSA Capital Technology and Transitional Energy podcast with me, Phil Smith, analyst at VSA Capital. And normally I do this with my partner in crime, Andrew Monk, our CEO, but Andrew is on business in South Africa. I think it's in Durban Mining Conference, so he's out for that and talking battery metals and all things to do with mining. And so this afternoon, joining me is David Scriven, our head of institutional sales. David, welcome to the podcast.
Thank you very much indeed, Phil. And lucky Mr. Monk in Cape Town, probably enjoying Tabletop Mountain and the sun. And anyway, I hope you are in good shape, sir.
Well, I managed to get a train in today, David, down to London, so hurrah for that. And of course, I'm delighted to hear that you are recovering from your hip operation. Hopefully, you will get more mobile very soon.
Yeah, mobility is definitely the theme here. Yes, I'm really working on being able to walk again. Anyways, I'll kick off if I may, and just wanted to observe that now that the market has heard from the US Fed on rates, I think attention is going to focus almost exclusively on earnings season, which has already started in the US, but has got more momentum. And in that regard, we had news that Meta's fourth quarter revenues were down 4%, but at the top end of guidance. And that was followed by aims of a year of efficiency and an announcement of a 40 billion buyback. So the stock was very strong overnight. And of course, another name that you want to look at, and I don't think it's come out just yet, probably after the close, is Amazon, who predicted in October that they'd have the slowest holiday season growth ever. And keep an eye on that, and then what the trends are in cloud sales growth. So as I say, results out later on today. And then quickly, I wanted to just look at ETFs and how they're performing, and just focus on the ones that have technically moved above all three key moving average lines. And one of them is clean tech, and we've talked about it before. And again, solar continues to be a driver with names trying to test new highs. Now, I think it was yesterday, China announced that it had installed 86 gigawatt of solar capacity in 2021, which is up 62% year over year, according to the National Energy Association. This makes the guidance from the China Photovoltaic Industry Association of 83 to 99 gigawatts for 23-25 comfortably achievable. But we're hearing that NEA guidance, indicates it's going to be more like 100 gigawatts for 2023. So interesting news from China there. Another ETF that's doing well is battery materials. And I noticed that yesterday, GM announced that they plan to have a phase 650 million investment in the Thacker Pass lithium mine in Nevada with Lithium Americas. Now, this is really interesting because it's securing yourself supply, but not via traditional routes. I mean, these companies would normally maybe have offtake arrangements rather than having a plan to invest in a mine. So it's very interesting, and I think other automakers might follow. Now, the SOX has also now turned positive too. One of the helpers, just one of the names there, was AMD, where fourth quarter revenues beat street estimates as they offset lower PC chip demand by making gains in more lucrative server markets. And then finally, in ETFs AI, as we mentioned in the previous podcast together, Phil, Microsoft are going forward, as I understand it, with this investment in ChatGPT. And it reminds me that Superseed Capital, who's a corporate client of ours, have just released their latest newsletter. Well worth taking a look here as they make a commentary on investment and AI build. And there's also a very interesting article on the merits of venture capital. Keep in mind, of course, that people like Apple, Google, Amazon, Microsoft all had venture backing when they started off. So with those thoughts in mind, what would you kindly share with us from what you've looked at?
Well, I'll kind of follow on quickly from that and on the results. Yeah, I was looking at those AMD. I mean, AMD is a semiconductor maker that develops advanced microprocessors for the PC server markets and other applications. And we've seen wider and earlier results saying that, obviously there's a huge amount of spend on cloud computing. There's been structural growth in that as people have gone from having their own in-house IT resources and servers to putting them all into data centers and being served over the cloud. I mean, that's been a structural trend. But particularly during COVID, there was big growth and investment, and of course that meant more PCs, more servers, more computer chips. And AMD have been doing very well. But what's interesting, I think, is that we've seen lots of poorer news from the cloud services market, and some of the tech markets have been coming off, and those related companies serving the PC and server markets. What is interesting is the SOX, which you mentioned, is the Philadelphia Stock Exchange Index, and that is up 21% year to date. And this is all big companies in there. And AMD's share price, the chipmaker you mentioned, is up 30% year to date. So there's something quite interesting going on here, is that you're seeing there has been a slowing in some industry demand in cloud services that's been well flagged, but at the same time, there are a number of players that are still continuing to be doing well, or actually, are gaining market share in it. So this is not, the tech markets have come right off, last year, Nasdaq in particular, but we're seeing this year a bit of a bounce back. So this set of results coming up, the US results, is going to be really, really interesting. So there we go. But moving on to transitional energy anyway, is you mentioned what's happening in terms of growth in solar in China, but in the UK, just in energy storage, there was news out that I saw a press article this week saying by the end of the year, 2022, 2.4 gigawatts of battery storage sites were connected into the UK, and that the pipeline for storage now is 35 gigawatts going forward in the UK. Now, obviously, all of that's got to get good connection over time, but quite substantial growth there. So that was interesting to see. And staying on the subject of transitional energy and electrification, this is a corporate client of ours, one we've just taken on actually, and it's Equipmake, and they're Aquis listed. The ticker is EQIP, market cap's 50 million, and they develop electric motors, electric inverters, power electronics. So all systems that are used in electrification of vehicles, primarily in the heavy transport space. The company's just raised £6 million, and we participated in helping raise that. They've announced a trading update with an order book of 8.6 million. They're working with First Group in buses. They have trials with them for their electrification technology, which will potentially end up being a retrofit for buses. And if trials are successful, it's got letters of intent potentially for hundreds of vehicles, but we need to see if the trials are a success. They're also making headway with fire trucks in the US that are looking to convert to electric, to be EVs rather than diesel powered. So they've got trials going on in the US, and they've been expanding their manufacturing facilities. So quite an interesting story there. Corporate client of ours, but has exciting growth prospects, and that's Equipmake. David, I don't know if you know Ricardo, been listed for a considerable amount of time. The ticker's RCDO, it's 300 million market cap. Have you come across them before, David? They're a consultancy business. Yeah. Well, so Ricardo is a strategic engineering environmental consultancy, and their specialist areas that they're involved in are transport, energy, specifically energy and environmental. They're involved in defence as well. And known for very much historically for automotive. But so Ricardo had a trading update for the 6 months to December. So the year end is June. Overall trading is in line with board expectations, good revenue, underlying profit growth. What's quite interesting about Ricardo, though, and why I'm kind of flagging this one to have a look at is, firstly, they've said the order books at the end of December in excess of 410 million, compared with 340 million at June 2022, and 311 million in December. So quite strong growth there. And it's up 17%, and we're mindful now of dollar pound exchange rates and currency. Their organic growth was 20% on a constant currency basis, like currency. So nice strong growth in order books there. They have reduced their net debt from 35 million in June down to 31 million. And on energy, environment, and the environment, which is a strong area of growth for them in engineering consultancy, they're seeing strong growth in orders, revenues, and profit. And in automotive, on their traditional areas, they're helping to restructure their business, that part of the business. And defence, they've seen strong growth and can't be expected. But so the company is going through change. It's restructuring some of its more traditional businesses, very much focused on energy, energy and environment in particular going forward, electrification, and seems to be making very strong progress. So that was quite good to see.
Sounds rather interesting, and I haven't had the opportunity to look at the chart because it would be interesting to see how it's performed of late and try and get a sense of what the valuation is as well.
Well, in terms of valuation, it has been performing very well. Very wide base of institutional shareholders, and it's trading on an EV to revenue multiple of 0.9 times, EV EBITDA multiple of 7 times. So, the face of it, investors should do of course, listeners should do their own research before making any investment decisions. But it's looked to be on reasonable multiples. So there we go. Right, moving on swiftly. Totally different tack is Darktrace. Darktrace, the ticket is DARK. In the news an awful lot this week. Now Darktrace is a cybersecurity software company. Sells globally to over 7,000 organizations in 110 countries, protecting cloud and email, internet of things and networks. It's cyber, right? Now, why has it been in the news? It's because there was a report issued by a company called Quintessential, a short seller in the States, and it's questioning the business practices of Darktrace. Particularly, I think, how it's handled sales and accounts of sales into distributors. Darktrace have issued statements robustly defending their accounting practices, and listeners can read about those. And according to an FT article yesterday, they've initiated planning a share buyback as well because the shares have weakened on news of this report coming out. Now, another thing that's been the connection here and why this Darktrace has been looked at is that Bobby Gustafson, the CEO, was previously at Autonomy, and Mike Lynch, the founder of Autonomy, of course, helped in financing, Invoke Capital in financing Darktrace. So, and of course he's battling extradition to the US because of fraud at Autonomy, which he denies. So. Yes, Darktrace very much in the news there. So let's hope that things get worked through. But David, you got any comments on that at all?
Not on Darktrace. No, I haven't been following them. No.
Yeah. Well, that's so moving on from that one. Centralnik, ticker is CNIC, 412 million market cap. They had a trading update for the full year. Now, Centralnik, Andrew and I had our little ones to really watch this year, and this was mine. So, what do they do? Very much focused on digital economy, and they manage what they call online marketplaces. But basically, this is subscriptions to domain names for websites. Email, they're helping their clients monetize their websites, but also set up new websites and domains. So, for instance, if you are a big business with lots of brands, you produce a new brand, you need to capture new domain names so you can set up the marketing for that particular brand online. It's a real drive for the business. In terms of the trading update, though, they're expecting to report gross revenues of $728 million. They obviously take a proportion of those sales. Net revenues, adjusted EBITDA, net revenues $177 million, and EBITDA of $85 million for the financial year. So very high margins there. And they say that they've seen very strong demand for their privacy safe online customer acquisition services. So I think this is to do with cookies or cookie-free offering on search, but they're seeing very strong demand there. Cash increased, which is something we always like to see, to $95 million at the end of December, from 56 million in the prior year. Net debt decreased as well, down to $57 million. And this is trading on, and the shares have been performing reasonably well, but an EV/NR multiple of 0.7 times and 6 times EV/EBITDA, David. So there you go. So that was our pick of the year, but please do your own homework. And keeping with IT, Computer Center. Ticker CCC, 2.7 billion market cap. Talked about Computer Center before. They had a trading update for year. What do? They provide cloud services, data center solutions. It's all about IT services to big corporates, actually. An IT resource, be that products, be it software, be it consultancy and advice, remote support. That's what Computer Center do. And they've been trading for a considerable amount of time, and their trading update points out that a record fourth quarter, and that results in the 18th consecutive year of underlying adjusted diluted earnings per share growth. There we go. Their full year is expected to be slightly ahead of guidance. And remember, they performed very well again during COVID, as businesses were spending an awful lot on cloud services, computer support, lots of home working to support and invest in tech for that. But they said that their adjusted profit before tax was down in the first half of the year versus the prior by first half 21 by 6%. And why was that? Well, that was to do with service margin performance. They've obviously seen strong benefits. You got a strong comparable during the COVID-related period, and also some inflationary pressure, which they don't expect to continue. So what was also interesting on this set of results as well was to see how things are performing, in terms of post-COVID for the cloud and IT sector in general. And they seem to be performing pretty well, actually. They're managing inflation. Something else I was looking out for this is they supply quite a lot of computer hardware to businesses as well. And it said that their inventory, so they've had to invest in inventory where lots of shortages around, David. You remember global shortages in silicon chips, computer products and stuff. But they have been able to substantially reverse their inventory position, and customers had as well, as they readjusted to plentiful supply. And so you've got to remember, as when we're looking for drivers for business, you're always looking at inventory. Be it within the company itself or its customers, because if they were holding loads of inventory, they're not going to be restocking, buying stuff. It's not an indication of growth. So that was quite good to see that kind of unwinding there at Computer Center. So continuing their consistent growth. So that was very interesting. And then finally, kind of meat or tech, just back to the semiconductor market, and that's results from Infineon, chip maker Infineon. And they had come out with quarterly results, I think, and they've seen margins rise 24% to 25%. And why I watch Infineon closely is because they're a big supplier of silicon chips to the automotive industry, but also data centers. So they've lifted their profit margin forecast, margin guidance. And I think that even though they've seen some weaker demand in smartphones and PCs and data centers, which we've been discussing, I think they've seen a lot better results in the automotive markets. And I bet supply is easing, the supply more as well into those markets. And the other final thing on tech is Sony. Those of you who've got PlayStation at home be very familiar with Sony's products. And they said that sales of PlayStation 5 consoles came in at 7.1 million units in the October to December quarter. And they saw this demand is up sharply from 3.9 million units a year earlier. Wow. That's strong spending on computer gaming equipment. And for those of you, if you follow the kind of computer game software sector, then that's an interesting underlying metric to see. Yeah, wow, that was really good. Well done, Sony.
Yeah, I guess I would have intuitively thought, there would be nice growth, but not that dramatic, post sort of COVID.
Yeah, I think that was interesting, David, is there's a few things happening here that wouldn't necessarily have happened as we expected. And I think part of a lot of that is to do with constrained supply potentially easing,
Right.
but also maybe consumer spend not necessarily coming off sharply as expected. You would think if we're going to a mild recession that maybe spend on cars, automotive would be easing, and so we're always watching the automotive markets. But then you've got to remember that their production has been so damn constrained because of supplies of parts over the last 2 years. So if that's freeing up, then they're able to push more cars out of not push them out of the door. That's a bad pun, but to produce more vehicles. And maybe with PlayStation 5 as well, certainly spend is more than holding up, but also an easing of supply in there as well. So this is such an interesting dynamic. And again, I wouldn't have anticipated the SOX sort of bouncing back as strongly, as strongly as it has, and it's maybe this whole thing of the markets is just sort of looking and thinking, is inflation really, is it easing? Is it going to get worse? So the uncertainty is almost positive, if you know what I mean. It's like folks are just really looking out for good news, and the markets are certainly reacting on it. This is very interesting. I've had a long career in the city. I've not quite seen this before.
Yeah, no, and that's why I sort of started the introduction as sort of saying that the market maybe is moving a little bit away in the US from, rate expectations, focusing on the earnings. But there seems to be an underlying optimism, and it's carrying us forward. And the street out there is, balanced between being bullish and bearish and worried about the earnings outlook. But we're moving higher.
Yeah, we are, and we've consistently seen in UK company reporting pretty good results, to be honest, over the last couple of months, and in the trading updates we're seeing. So it's a really interesting time. It really is. It's quite different from what I've seen before, and we look forward to keeping our listeners updated on it. And I think, David, that's probably a good sort of note to end on. It's been brilliant having you on with me this week. And as always, Andrew and I say, if listeners have got any suggestions for us, any companies, anything we may have missed in terms of trading updates and news, companies you'd like us to discuss, etc., don't hesitate to let us know. And with that, David, thank you very much for your help today on the podcast, and we look forward to another VSA Capital Transitional and Tech podcast next week on Thursday.
Pleasure, and many thanks.
Thank you, David.